Welcome to the Parts and Labor Podcast, the podcast that explores strategies, systems, and stories that drive salon success. I'm Alicia, founder and CEO of Salon Scale.
And I'm Whitney, head of sales here at Salon Scale. Welcome to the Parts and Labor Podcast. Welcome back to the Parts and Labor Podcast. I'm Whitney.
And I'm Alicia.
And today we have a really interesting kind of mini episode for you. So it's going to be focused on your prices are lying to you.
Ouch. Well, here we go.
So, and the topic we want to touch on really in this episode, when we say your prices are lying to you, is you kind of come up with this pricing, and then a lot of times what salon owners feel like is, okay, well, I factored everything in, right? Like I know what my tubes cost, that's factored into the pricing, yet why when I go to do like an order, is the money not there? Why am I not feeling like I lined everything up correctly and it's still not working out?
Well, I think, lying, I feel like the big thing is just, it comes down to a few things, but I think one thing I've noticed is it's properly budgeting, right? Like we have a lot of assuming, and we think that like, okay, if we price this out to a customer, we pay X amount of percentage in commission, maybe we have some buffer there for some product that we hope they stay within that. But really when it comes down to it, there's so much more that's coming through. There's your fixed expenses, there's your rent and everything else that's coming through. That isn't kind of being factored in, and like these two things just don't align, right? Mm-hmm. So like there are things that your prices are lying to you when you are looking at prices being charged compared to like profit at the end of the month, right? So if you're looking at that, the pricing is the function, like the pricing is the actual financial model, the model to be able to hit that profit target or hit that thing. And we as salon owners don't analyze this enough. And a lot of the times, when things go up, when product costs go up or rent goes up, or, we invested in a new color line, or we, remodeled the salon, we didn't factor that investment is going to have to come from somewhere. Mm-hmm. So how do you get revenue in your business? How do you get money in? And it's all around your pricing, right? So I think we're always playing these kind of catch-ups that kind of happen. But a lot of the times that's exactly the feeling. It's like you've done a whole month of clients. It says you brought in, generated, $10,000 worth of revenue, but yet once you paid all your bills and you look at the account, the bank account is just not reflecting it. And it makes you kind of spiral over and over again.
And I think too, I want to focus in specifically on like replenishment, because I think that's where a lot of salon owners that I talk to, it's specifically when they go to reorder, like that they're like, okay, what we're having to buy is not matching up to what we're bringing in. And so there's a big disconnect somewhere. And so there's one like paying for it, and then two, like that extra product. And so waste gets blamed, a lot for eating those costs. But, there's really a way to set your pricing up where you can factor that replenishment in to where color goes from really being this like massive liability and expense in your business into something that can pay for itself.
Yeah, I think that's like the aha moment. Every time I talk to a salon owner and we go through, okay, so you're charging $100 to the customer, you allocated $10, so 10% of it to go towards product, you paid 50% commission. So what happens if they use more, and where is the money for replenishing that $10? Mm-hmm. So yes, you covered 10% or $10 to go towards what was used, but now you have to replenish. Now you have to like buy the tube to do the service on another client at another time. And this is the aha moment. This is the moment where salon owners go, holy crap, I didn't think about that. Where is that coming from? Well, that's coming from the that's coming from your gross profit. Like that's coming from profit that's being generated just on a daily, weekly, annually basis. And so like This is the huge moment in the eye opener, is that this variable expense, hair color specifically, cannot just be guessed and added in. It has to be separated.
Yeah.
And the salons that take this and move into this, they instantly get the cash release. They instantly go, oh my gosh, that's where it is. And it's simple. Instead of like your color being an expense, it's now income.
Mm-hmm.
Instead of your color being an expense and also having compound effects, like you're paying commissions on it, you haven't gathered enough cash flow to replenish the product. If you put it on the complete other side, it now becomes income to the salon to not only cover that product being used, but also replenish for the next time. Now you never have to worry about it. And then the other part of your, of your margin, whatever you're left with profit, that's going to your fixed expenses. Like that's going for rent. That's going for all these investments in your business. But you simply can't put this variable part, and that's what's lying. That's what the industry is lied in that way, and it's caught up to us. And the reason why it's caught up to us is inflation and trend. We've had more hair color being used, more amounts of products being used in one time, and the product has rose. So because of all those factors, this is why we're now seeing we absolutely can't keep it in.
Yeah. And just to be kind of specific about what Alicia means with that, like with salon scale, the vast majority, the way of our clients price with it is they separate their parts from labor. Obviously, they charge kind of specifically for their time or their service costs, and then they add on the product costs on top. And when we talk about factoring and replenishment, that's where a markup comes in. That's where, just like a retail item, you mark your color up by, and that's where it goes from being, and you have the option. You can leave it at just straight wholesale and cover the amount that you already purchased, but that leaves you from, again, pulling from your profit to be able to repurchase it for the next client. So if you add a markup onto it, which you do through salon scale, then you're covering those next reorders to your always, and you go from playing like defense and playing catch up to being able to play offense.
Yeah, and I think, another thing I thought about was the worst thing ever printed on a color tube is for professional use only, in this way. Because of that, it's created this like caste that stylists and salon owners think it's wrong to charge consumers for hair product. Like that's a professional good, I can't charge for that. And that's so wrong, because you should absolutely make money off every aspect of your business, and you should have a margin or a markup to replenish the products that you're using your cost of goods. And so if there's anything that anyone gets out of this conversation, it's like, just because it says that on there, it means you can't just give it to someone to go and do their own hair color, but that does not mean you cannot charge for that too, times two, so that you are making sure that it's constantly being replenished so that you can keep doing hair color and keep making money.
Well, exactly right. In fact, I talked to a salon owner the other day on a call, and she's like, retail used to be big for us, but now a lot of these, companies now sell on Amazon and for cheaper, and so that kind of revenue stream that really came with retail, they kind of, a lot of the salon owners feel a bit thrown under the bus. Whereas if you take that product cost, like that is something available only to salon professionals. You get to purchase that because of your credentials, right? And so make money off of that. They can't take that from you. Why would you not? Other industries do it too. If you can only buy something as a professional, make that your income stream. Again, like you said, don't ever feel guilty about making money off of every aspect of your business.
Yeah, and I think, at the end of the day, like this isn't an open bar. This isn't a one-time event where you can just, cover all the supplies and you're never buying that product again. These are products that need to constantly be moving through. And so I think that this is the big thing too, is when it comes to that, and when we like look through a lot of the data, the results, what everybody is kind of starting to see is that making sure that you are marking up that product, treating it no different than you'd have your retail, and adding more revenue streams in your business is a sure way to be able to survive and thrive through any season that we're seeing. But yeah, I just think that, when I look at how do salons make money, we don't have a ton of revenue streams, right? Like you can do services and you can sell retail. Right? And so like if your cash flow's not there and you need to generate more revenue and cash into the business, Like, yeah, you could try and push your stylists to hopefully do more services, but maybe the services are down, maybe the service count's down. And on the retail side, like you said, maybe, retail's down and low. So like what other areas can we work on? And this is the third, like this is the chance, and it's always going. It's and every day it's a need. It's a need to have, not a nice to have. So therefore, when you look at the smartest thing to do is take the thing that is naturally being used every single day and apply, parts and labor method, mark that product up, and you'll start to make, a few dollars on every single tube over and over and over and over and over, and you will see a lot more consistency in your bank account.
For the people that think it's double dipping, I would say if you're charging $30, $25 for wool, you're already doing it. I would say that it's just not accurate to exactly what your client is getting, and it's often emotionally discounted off. So, it's, maybe you want to take that.
I think when we hear, comments on this, because there's going to be a lot of people that are going to comment on this, and they're going to say, well, isn't that double dipping? No, that math doesn't check out. Like if you use $10, and then you're doubling it. Like there's a lot of people that call this double dipping, right? But essentially, what I would say and what I would comment on this is there was that initial investment into your inventory or stock, right? That was, just like your initial investment into your build up, your renovation, right? So when you factor in that pricing and you look at how you're paying those things back, that went into how, your pricing models, all that stuff. So when it comes to double dipping, where are you going to build the cash flow? Where are you going to do that? And I feel like this is also a place where we get sometimes fear mongering, we get sometimes people pushing back. It's just noise. But I can surely say the people that don't say it's double dipping and do take this option are far more profitable and far more successful, and are finding a way more consistent life as being, being ahead of their product.
And I looked at a few weeks ago, like what other industries mark up their products, and it was pretty much every service industry between like 50 and 400%. So somebody like a mechanic, they'll mark up like the smaller ones a lot. And the justification behind kind of why they do this too, it's like, well, are you paying yourself for the time that you're spent ordering? Are you paying yourself outside of doing any service for all the jobs that you have to do too? There's time that goes into every single part of owning a business, and usually that's being worked for free. And so again, just think of it as, a way to earn money in your business too, off something that you're already providing.
Yeah, last thing I'll say on this too is that the reality is that the original order needed to be paid for. And so how did it get paid for? Like it got paid for by your profit or what you generated, and you slowly paid that down. So by getting ahead and making sure you're charging for what was used plus the next, that is exactly how business runs. Just like you said, which is like no mechanic would charge you just cost for the part. No business would ever just give you the straight part at cost. They have to make money off that business. There's other factors in there. There's shipping costs that come in there. There's so many other, it's on credit. There's interest that's on there as well. So there's just a lot of things that need to be factored in, that it's chewing up the cash flow. So by looking at that factor, it isn't double dipping. It's a very smart way to build that cash flow, which is a very important thing to kind of look at. But yeah, I think I kind of if I'm honest, I feel like when I hear comments like that, I'm just like, this person just needs a little bit more education to understand cash flow management. This is a cash flow issue. We can lump it as a pricing issue, but pricing is what you charge, but the cash flow is your reality. That's exactly what is really happening in your business. So when you look at that and you factor that back on a variable expense like that, you cannot simply just charge the cost for it, because what you've done is that $10 is going to pay back what you originally paid, whether it was last month, last week, or even 3 months ago. That's just covering what was used back then. You now have to replenish for the future. And so this is where we play this kind of game. So Yeah, I guess I would just end it by saying that the smartest thing you can do is separate your product costs from your labor so that you never get behind. You have the right cash flow to be able to support your business moving forward. And you know, the hot topic today was like your pricing's lying. Really, at the end of the day, there's one missing ingredient in your pricing that you really need to analyze, and it's called replenishment. Are you building enough room in your pricing that supports not only covering what was used that day, but also supporting the fact that you're going to have to buy and replenish that next week?
Mm-hmm.
And if you ask this question over, like I challenge anyone to just take one type of service, and you know, whether it's a balayage or a full all over color, what do you charge for it? What kind of, do you have a budget? Do you have a percentage? Are you covering product or none at all? If you have a commission, what's your commission? Then start to do the math and look at it is what happens if they've used more or that amount. Then when you break it down, you're going to see exactly that. What at the end of the day, like your top line isn't your bottom line. Like the top line, what you have there still needs to go towards paying now for all those other expenses, and the biggest one is replenishment. So this is where you're seeing a huge margin loss, and yeah, so I'd say for those that are interested in learning a little bit more, well, just hop on with the demo with us, get a call. We can analyze some pricing that, you know, if you have questions or you want to look at your exact scenarios, we'd be happy to show you that. And we'd be happy to talk a little bit more with you the next time, Parts and Labor Podcast.